How about this? Okay, I think this will have to do. For some reason, my mic is a bit funny. I hope you guys can hear me okay. Is that all right? Apologies for that, guys. Yeah, I don't know what it is today with sound. We had a similar issue this morning. It's all that new mic equipment, I think. But anyway, let's start again here, guys. It's been a fantastically exciting day. About 12 hours ago, many of you joined us for the Alibaba live call, the conference call with management, who were basically trying to get the message across. Very much the sentence that Joe, the vice chairman of Alibaba, was using was, we are happy to have put this chapter behind us. So they were really wanting to talk about growth and acquiring new users in urban, rural areas and all that kind of thing. I need a battery swap, Geordie, absolutely, something like that. So very, very much the message we're trying to get out is that, yes, we have paid this fine. We are happy with the fine. We're going to move on. They were pressed by some of the investment banks analysts who were on that call. How's this going to affect your business going forward? And they basically said, well, some of the basic software, some of the basic services we are offering, we are going to make that free. We have actually already been doing that the last couple of years, but we're going to do more of that. And instead, we are going to charge people for the kind of high-end premium service. We're going to charge them a premium for that. So that's kind of makes sense really in a competitive landscape that you have to offer your more standard offerings for free. We had some interesting take from JP Morgan and some of the brokerage, some of the investment houses on this, which I'm going to show you. Now, as always, guys, this is not financial advice. This is just for entertainment only. You guys know that. Philco, yes, we're having a bit of a microphone situation here for some reason. I don't really know why. Hang on.
It's back. It's back now. Okay, fantastic. We've switched back to the mic we actually want to use, which sounds better. Otherwise, it was a backup mic I have here. Sounds like inside a toilet room. Well, guys, I think this should have fixed it. But Philco, fantastic to have you on here. Muscle Dog, a lot of our members on here. Puikyat, Go, a lot of familiar faces. Welcome, guys, to this chat. So some of you joined us on the call this morning, or your afternoon, it was rather, Andrew, for example. I'm glad that's better. That's why I have this mic rather than that one over there. But occasionally I think I knock a cable or a cat sits on one or something like that. Studio sound, that's what we want, Bernd. Thank you very much for letting me know, and thanks for being patient with the sound setup. Quite honestly, the most difficult thing about YouTube is the sound. Everything else is easy breezy. So what they were really saying is that, and let me show you that here from our Baba channel here. So we had that this morning, that see how many messages we had today on Alibaba. This is just the Alibaba channel. Somewhere up here was basically JP Morgan, and they are saying, wherever it went, here it is. It's a little hard to see on a big screen. On a small screen, the resolution is actually quite a bit better. Well, there we go. As you can see that JP Morgan says it's going to have an impact of about 4% of net profit. And that's just their sort of rough estimate on, a little bit more of a competitive environment and not being able to perhaps be quite as aggressive as that. Now, what did the stock market do? Well, if you look at, this is Hong Kong today, right? So Hong Kong opened absolutely flying with Baba, and then we sort of zigzagged down a little bit. We found some pretty good support around 230, 232, and then at the end of the day, you typically get a little bit of selling off. That's just the typical pattern here. If we go back to actual Baba now, and here it is, you can see what's going on there. Baba opened at 237. That is 6% up or so on where we closed off, and you can see that lovely little jump there from the previous day. Where did we close previously? I don't know why it isn't showing us that. Here it is. There you can see. Can you see the jump from down here to up there? So basically, this distance is about 6.5% here. I don't know why I'm painting that in red. We should make that green because it is a celebratory day for Alibaba when we actually have some positive momentum. And I think generally speaking, the whole investment banking community and analyst community are seeing this as, yes, it's great. They have put this behind them and it doesn't really materially affect the business. And therefore, JP Morgan telling us what was their price target. They have it in here. the stock could trade up to $285 at a more reasonable 15 times forward 2022 PE. For the next few quarters, we believe the share price will be driven by the following: conclusion of its fintech operation restructuring plan, that's Ant relisting, and growth metrics of Taobao grocery, which is essentially what they are rolling out to sort of combat PDD, and then competition against e-commerce peers in terms of active monthly users. And Alibaba was saying to us this morning that they are actually very bullish on acquiring new members. Now, someone's here saying JD is down. Yes, JD and Tencent and the other tech majors are going to be somewhat hit by this. Why? Because Alibaba's put it behind them, but everybody kind of expects for all of them to get a slap on the wrist too. So I do think there is a fair chance, let me pull that up here, the market, that stocks like JD, PDD, etc. Will come a little bit under pressure. Tencent, JD is down a bit. I actually haven't got Tencent on this because this is a NASDAQ one. Yeah, so I think that's kind of the slight downside for everybody else. But quite honestly, most of this pressure has been rather unfairly pointed at Alibaba, when really everybody's been up to the same shenanigans as Baba. So therefore, they will all be facing the same kind of situation. Lots of volume in Baba. Yes, indeed. So far today, these are shares 12, 23, 20,000 or so traded. We can see this live here, actually, if you, here it is. You can see live here the trading, 100 shares, 25 shares, 100 shares, not massive trades, but quite a lot of them, as you can see, right? Really quite a lot of volume here this morning. A lot of people, I think, in New York have woken up and thought, oh, wow, look at what happens in Hong Kong. Let's jump in on that. And you can see why, because I think from a fundamental point of view, we can also look at some of the valuation models I've done. We can look at some of the benchmark comparisons if you guys are so inclined. And you can just see Alibaba is just an incredibly profitable business. That really beggars belief what the valuation is. Let me show you that here. This is I pulled up PLTR because I was just doing a video on that before. But let me just show you this here, just our benchmark, and you get a bit of a feel for how this is valued. Let me make this a little bit bigger. So I've got Alibaba, Amazon, Facebook, Microsoft, etc. on here. And then look at our PE ratio for Alibaba. It's 24. So it's cheaper than Facebook. Price to book is at 4. It's like, what is that, 20% or something of Amazon, which is just insane because Alibaba is more profitable. It is, in fact, a better business. And I know some people don't like to hear that, but it is, because selling things is not very profitable, whereas being the shovel that allows other people to sell things is very, very profitable. So lots of interesting stuff there on the business. And just, gross profit margin is 43%. They have 11% cash as a proportion of capital. Leverage free cash flow is $27 billion US, which is, in the sort of Amazon, Microsoft league. In fact, it's bigger than those. So it really is just a phenomenal business. Only Apple and Microsoft really managed to outdo that. So yeah, I mean, from a fundamental point of view, everything about this business just screams, buy me, buy me, buy me. But we have, of course, had this political overhang now for quite some time. And if you see the Reuters headline earlier, what a load of nonsense is they're saying. What was this? What did they say here earlier? We were just talking about that. Ant Group to overhaul business as Beijing clamps down. That's the idiotic headline that someone half asleep at Reuters came up. And what are they saying? That Ant is becoming a financial holding company. Well, watch some of my videos from 2 months ago, and I told you the same thing, and I showed you the news resources. They're recycling a 2-month-old story here, rather than bothering to listen to the conference call that we had this morning and perhaps reporting on what management said, which might be some actual news here. So sometimes it's rather frustrating being a long-term Baba shareholder, which I am, because you get some real news out, and what do they print? They don't print it anymore, but you get what I mean. It's online. It's 2-month-old news, and that Reuters article is going to get recycled hundreds and hundreds of times. So it's a little bit of a sad story there, but for once at least, the Asian investors or the Hong Kong investors voted with their feet, and we can see BABA actually flying a bit more here in New York. Now, Hong Kong, as a cautionary tale, did the same thing. We opened up sort of 7-8% during the day, and then we sort of came down a little bit during the day. Let me show you actually what that chart is. Over here, because that was quite an interesting one. You can see how let me grab a pen. We basically rallied up to about 8% up, and then we sort of came down, bit sideways, bit down, and sort of closed up. Still, yes, very, very nicely up. What was it? 6.5% was where we closed on the day. But, we did lose. Typically, at the end of the day, there is a little bit of a sell-off in most markets. You typically see more volume at the end of the day. And, well, at the beginning of the day, pre-market, you see volume. And you see that just before the close as people sort of try to get in on the action before market closes. Bash is saying here, Jack Ma's Ant Group to become a financial holding company. Yes, and that is exactly, sorry, Bash, it isn't your fault at all. But it is just, it's literally 2-month-old news. The financial holding company law has been in draft form for over 3 years. It's based on US legislation. Because the US has the same regulation. And we had discussions about that probably 9 months ago or so, that all the fintech companies would have to go into some sort of form of a holding company. And that was one of the first requirements that the Chinese central bank came out with, the Bank of China, the People's Bank of China, rather, after the Ant restructuring. So I think in late December, early January, that was actually one of their 5 demands, that Ant will have to be a financial holding company. So it's just baffling why somebody like Reuters prints that 4 months late. I just don't understand it. And it adds to a little bit, it just makes it, they like to use the phrase Beijing clamps down, whereas really you have the headline could also be Chinese regulators close antitrust investigation in record time in just 3 months. Give me an investigation into Google, Microsoft, Facebook, where the US regulator has done that in 3 months. It just doesn't happen. It takes years, sometimes more than a decade, like Microsoft's fight, for example, with the European Commission. So, AA stock. If you guys want to watch Hong Kong stocks, that's a good one. It's a good website. So, bada bing, you sold all your NEO for AMC. Okay, well, good luck to you. Okay. That's all I can say to that. I have nothing against AMC. It's just, it isn't a fundamental play. Of course, it is a speculative play entirely. We also have a little bit more news from our friends at Berkshire Hathaway, so to speak. Munger here saying the Daily Journal Corporation has needs securities held as cash equivalents. These cash equivalents would normally be US Treasury bills, but with returns now so low, the company instead invests in common stock. Unless its long-term prospects seem good, a common stock is not considered to be a good cash equivalent. And then he says a minor part of Daily Journal's corporation's cash equivalent now consists of a tiny amount of Alibaba common stock. Now, what is a tiny amount to a man like Charlie Munger? I've got his portfolio here. There we go. All of these, of course, this is all our Patreon guys, if you want to access that. So he has at the moment Alibaba, $39 million of Alibaba stock, rather well timed. He bought it before this rally. He paid around 227 is what I estimate. So that's a tiny amount of money to him, just under $40 million, and now by far the third largest value in there. In fact, it's possible. It isn't impossible over time, I think, that BABA will become the second largest item in here, just because it might outperform Wells Fargo. So I think that's kind of an interesting one. Can you show us some technicals on NEO? It's broken my base of 38. I'm wondering how long you think it'll go in the short term. I'm bullish end of this year, 60, 65. What a good day. PLT looked good pre-market after new contract, but we're seeing a sell-off at open, Brian. Okay, let's talk NEO and then Palantir, guys, in that order for no particular reason. Okay, hang on. I need to load this chart. NEO, here we go. Let me get rid of that. So here is NEO at the moment. So NEO is sitting at 37.27. It's okay. You can see very much the support it has. And let me show that to you let me get rid of a few of these arrows first. Otherwise, you can't see a thing. And then I'll put in a couple of more. As you can see here on the 24th of March, that was our closing of the day. That was where we are right now. On the 7th of March, it was our low during the day, what I'm pointing at there. And I'll magnify this for you in a second. And then also on our last trading day, it was also our low, more or less. So you can see that's basically where we are. That is our support line here. It's that orange line here at, what is that, 36? Hang on, what is that line? 36.94, about $37, I would call that, thereabouts. That is our real somewhere around here. Let me see if I can make that a round number. Yeah. So that's basically our real support line here. That's once, that's twice, that's 3 times, and I'm not going to go back any further. And it's also a Fibonacci support line here at 36.90. So that is really the support line, and we want to close certainly above that. It will also be great, again, if we pull off what we did on the last trading day and we manage to close just above 38. I think there's a good chance. I think people wait out till the end of the day and they look for the bargain NEO, and then they snap it up, and that drives us up above $38. So I am actually fairly bullish on that one intraday. Head and shoulder pattern, yes, I do see what you mean. You could see that okay, so this is basically one shoulder, one head, another shoulder, and now we have a second shoulder. And that's sort of kind of what breaks it, because what you would expect with that kind of a movement is you would expect a head and shoulder movement is meant to invert the trend. So this was an upwards trend. So that's the head, second shoulder, and then it would do that. That is what the head and shoulder would predict. It hasn't done that. Why hasn't it done that? Because it isn't just unique to this. Most tech stocks, you look at this for this period, have that pattern. So it is more of a market pattern, I would say, than an actual stock-related pattern. And that's why I haven't really paid that much attention to it. Now, what are we seeing here in terms of pattern? We've gone one high, one low, or rather 2 lows here. This is now the second high. So are we here seeing the third low? If we are, again, this is a pattern. After the third low, you tend to then have gathered enough momentum and strength and support to really actually keep moving. MacJar has been found. Yes, we have had a lot of fun with those kind of comments today. In fact, there was a fantastic one earlier on the channel. I don't know if can you see that here? MacJar lives, Baba to the moon. I think that's a pretty funny one. So yeah, there is, of course, on a serious note, there is that political element to it. Is it entirely over? The antitrust investigation, yes. There is still, and they said that on the call today, they are looking at all the M&A deals that the whole tech sector has done for the last 10 years or so. And that's how all this started. If you remember this, it was in December. Alibaba got fined something like $73,000 for not filing a piece of paper related to an M&A deal they'd done a couple of years prior. So under that sort of investigation, they're still looking at things. But with that, I don't really expect anything massive to come out. Perhaps a couple of more slaps on the wrist, but nothing major. But we are not going to see much M&A activity from Alibaba, Tencent, Meituan, and the likes in the next couple of weeks and months until that's completed. And then, of course, what we really want to get back to is that we... go get and relisted. And I think there is a chance by the end of the year that all of the legislation is in place, and that was a $50 discount and not happening. So that I would bring us quite easily into the $300 range there. Muscle Doc here saying it's been a grueling several months. Well, yes, I do think, patience pays off in the end. It is always about time in market. And when you look at the financials and you look at this, the company and the growth, where do you get 16% EBIT margin and 39% growth? That's pretty rare with 27 billion in free cash flow. There really aren't very many companies like that. So for that reason, I was pretty confident to just sit this one out because it's an events-driven thing. And in fact, for me, it was a good buying opportunity. I bought some at 220. I've also bought some more when it was in the 250s, thinking, we are rallying up. But either way, I'm happy with me buying that. Thank you very much. I appreciate your kind comments there, Hansen, Chris. Feel free to always ask. Bash is saying, should we buy JD or Barber or none? Bash, I mean, I can never answer that sort of question directly because I can't give you financial advice. That's my legal restrictions here. I think you can just look at those companies. I've also got a couple of sort of comparative benchmarks over on the Patreon, so you can check that out. Have a look at what are the valuations, what are the multiples, what's the free cash flow, what are the margins, what are the gross margins, what are the net margins, where's the growth coming from. Go to the investor relations websites, pull up the last quarterly report, study it, see what they're telling you, read the transcript, and if that sounds too tedious, buy an ETF. That's what I would say. It's just, unless you're willing to put in the research or, and at least spend those couple of hours to do it, I would honestly buy something either that you understand. Perhaps you work in an industry where it gives you some technical or specialist knowledge, and that can be any industry. If not, just buy an ETF and be done with it, or find a great fund with very low fees. That's also another way of doing it. Now, Palantir here, our long struggling Palantir. I am actually going to talk to you guys about Palantir a bit because there is quite a lot of interesting stuff out apart from the chart here, which at the moment has support at 2339, that thin green line in here. And that's a Fibonacci support, but again, also here 1, 2, 3 days, and today the low so far. So down -2%. No particular reason there, I would say. I posted this also on our Discord earlier in the day. This here, I don't know if you can see that very well. So this is an excerpt from in fact, actually, I've got the original still open, so I can show that to you here. This is essentially the budget of the Department of Defense, and they have to have this justification book where they explain to everybody why they are spending and what they are spending. And this is all about the JAIC. This is all about the Joint Artificial Intelligence Center. And what are they doing? Well, they're revamping the Department of Defense. And it is also part of a broader revamp of the whole federal government to basically go into big intelligent AI data processing. And what is it doing? And there's a really interesting sentence here. It's the second sentence. So it says here, JAIC's mission is to accelerate the delivery of AI to achieve impact scaled across the DoD at relevant speed to transform the DoD and ensure the nation maintains a competitive advantage. JAIC capitalizes on Project Maven's efforts as the Pathfinder AI initiative for the DoD to further critical AI architecture and prototyping to rapidly expand AI to other mission areas. Did you catch what I was saying there? Project Maven. You might not realize what that is. Let me show you. This is an old article from 2019. Palantir took over Project Maven from Google. Google thought it was a bit too hot for them. They didn't like that it was politically sensitive. So Palantir has taken it over. So the entire revamp of the AI and data system of the US Department of Defense is based on the project that Palantir is running. Now, this particular JAIC center has a budget of only $208 million US. That's not for contracts. That's just for them running their internal stuff. But they are basically, and there's loads on that. And I'm going to put out a video on this as well, guys, if you're interested. I posted this also today here on our Patreon. There is an exciting C-SPAN video, and it might not be your favorite news source, but it's actually for once really quite interesting here. The vice chair of the National Security Commission on AI, he talks for about an hour and it really is quite insightful. You could listen to it, or you could read the summary here that he's got. And I've just highlighted the word data because that's what it's all about. So basically what they want to achieve, and our mission is a modernized, data-driven, software-heavy organization that will do things in a different way. And he's talking about the Department of Defense, a massive, colossal organization. So for me, what I'm seeing here, I think Palantir's payday is about to come, because so far they've done small little things, the drone program, special forces, tiny little parts of the DoD expenditure, and now the DoD has realized, hang on, and he actually says it, he says we are actually lagging behind to China. He says here, we actually assess that China is a little bit ahead of the United States in fielding applications at scale. I've never really heard somebody from the Department of Defense use the word a little bit, but it is quite funny here, really. But what are they going to do? We're going to have access to all users in the department to software, models, data, computing, and developmental environments for DevSecOps. So the whole Department of Defense is basically going to become one modern, data-driven, AI-driven operating system. And who's going to run that? Well, in my view, there is only one company that can possibly do that. And there are two reasons for that. One is this. This is from Palantir's last quarterly earnings. And if you see down here, so this is basically the impact level. So the Department of Defense has for software as a service security levels. I imagine it starts at 0 and it goes up to 6. So Palantir at the moment sits at level 5. There is nobody else at level 5. There is Snowflake and Google at level 2. But they're quite frankly not willing to do these contracts anyway. And then there's SAIP, Salesforce, and Oracle at level 4. But that's just sort of unclassified information. Perhaps they run some of their servers on that stuff like Oracle. And at level 5 is only Palantir. And Palantir has been working for some years to get up to level 6. And I think that's going to come because it's the only way the Department of Defense can run themselves, by giving Palantir that access. And if you've been reading and watching my videos on Palantir, every time they grant them a contract, there is only one bidder, it's Palantir, and then there's always an explanation saying, look, there simply isn't anybody else. And Luke, I see your point here. I think from a political point of view, I appreciate a lot of people won't agree with that. They won't like the fact that the US government is going massively into AI. But I think you have to realize that since 2000, the US has established intelligence gathering mechanisms that are vast. And all of that data is being collected and it isn't being used very well. And if you want to have the leading military in the world, the next wars will be won not on how many tanks you have or missiles or fighter jets. It'll be won on who's got the better AI. And therefore, the US Department of Defense will be the first to adopt this, and they're going to do that. And in all honesty, what's going to come afterwards? Well, if you read about, he's saying we're going to get organized by 2025. The department and the federal government should have the foundations in place for widespread integration of AI across the federal government, particularly in DoD. So DoD is going to do this first, and after that, it's going to be the rest of the government. And my bet is that the entire US federal government is going to run on an operating system provided by Palantir. And you might think some people don't like that, but I think there isn't really anybody else, and there isn't really anybody else willing to do the job, because Silicon Valley companies don't want to be near anything that is a bit potentially has ethical implications. They just don't want to do it. So they're leaving it all to Palantir, basically. That's kind of the funny thing. When you boycott something or you put sanctions up, you basically leave the whole field to the one person or company willing to do it. So there we are. So Luke, okay, you agree. You also might as well make money out of it. Unlikely if they're going to be contracted by the US government, yes. So I think that is, if you just think about the tiny contracts that Palantir has so far, and again, let me show that to you. I'll go back here onto our view page. Yeah, we can leave that. And on our Discord, you can filter by all sorts of stuff here, but obviously I've got quite a lot of Palantir on here. And if you just go back to our discounted cash flow model, which in fairness now is a couple of months old, 2 or so. But look at this and you will see that our revenue this year is only just over 1 billion. And the majority of that is obviously from the US government. I don't know, is it 600 million, 800 million, something like that. They only need 30% growth to get to their target for this year, what analysts expect. If you power the Department of Defense, Palantir is no longer going to get these sort of small, miserly 200, 300 million US dollar contracts. No, there will be billion-dollar contracts because they're going to be massive and they're going to integrate all that data, all those intelligence agency, all of that stuff has to come together. So I do think that alone will actually get them to their targets by sort of 2023 or so. And then after that, just think federal government data. How much data is there? It is an incredible amount. Once you have one system set up, why would you install a competing system? It's a bit like if you're a company, are you going to run 2/3 of your employees on Microsoft Windows sort of base computers and the other third on Apple? Probably not, because it just doesn't make any sense. It isn't particularly compatible. So I think actually probably pretty much their entire revenue growth that is required to get them on target will be provided by the US government. So it has me bullish on the stock again. I did a video yesterday on all the insider selling that's to come, and I think that's important to appreciate, and I encourage you to watch that. So Lee Wee Lun says here, people complain about Palantir, yet they buy Lockheed Martin, other stocks of weapon manufacturers. Yes, absolutely. Most aircraft manufacturers actually have a military arm to them. So does somebody know something about military stocks, says Bob? I shout them up, Bob. We can always have a look at them. Data is the new oil, crypto is the new gold, Baba is the new EV, says Streve. That's kind of an interesting sentence there. You drop in quite a lot there. Yes, the Palantir stock, I think it is going to have an interesting time, to put it politely. Why? Because there is this political element here. We can see at the moment also our support is the 9-day moving average line, that little yellow line here in the background. That was also our low so far today. At the moment, though, we are sitting snugly above that little green support line here, which is at, what is it at? 23.39. That's our Fibonacci support line here. And also our support from the previous trading day, pretty much, and a couple of others here, more or less, there again. So yeah, that's a fairly good support level. So I think there's a pretty good chance we are going to hold that. Can you do a technical analysis on Bitcoin tree? Yeah, absolutely. Sure, I can pull that up. I don't mind at all. Bitcoin is an interesting one, actually, for technical analysis, particularly because that's kind of all we've got is BTC crypto. Let's pull up the Coinbase one. It is all momentum, right? I mean, that's really what it's all about here. Let me close that one here. So one interesting thing is, of course, you can see we are following the 50-day moving average line, which makes a great deal of sense. When we touch it, I think those are always fantastic buying opportunities because we have so far always managed to rally up. And it moves in this pattern. It goes down, it finds a new high, it then goes back down again, finds the support level again a little bit higher than it was before, and then it exceeds it. It always overshoots, it comes back down, it corrects. And this time now we are still, we're doing this here. So I think there is a good chance that we are now over 60. I think we might come down again a little bit and then we'll exceed it. And I think that's just the pattern that this, I want to say stock, but investment has been doing for quite some time. So that's kind of an interesting one there. If we look at, so I didn't want to paint that, this a little bit more closely. You can also see the buy and sell signals here from the, I've got 9 and 20-day moving average lines here. So the pink one is the 9-day one. So when that crosses the blue line, that's the sell signal. Actually, that almost calls the bottom of the market. You might need to go in a little bit shorter than these. And then here, it crosses in the opposite direction. So the pink crossing the blue, and that gives us a buy signal here. And at the moment, they are kind of moving up again in parallel, as you might expect. And if we look at a faster moving indicator, something like Williams R, you get here that buy signal on the 28th of March. Here we go. And that wasn't a bad call, was it? On that day, we were at 55,000, 55 to 56,000. So it called that buy signal quite neatly. So if you just look at, and here it basically gave us a sell signal, here it gave us a buy signal. So each time there were pretty good trades. If I illustrate that here, you got in here, you got out there. So you missed this bit here. You missed out on this loss period, and then you got back in here. And now you are still flying because we haven't had a sell signal there yet. So kind of a nice indicator how technicals can help you trade. I wouldn't trade on just one indicator, but I would combine a couple of them perhaps. But Williams R is quite a fast one, so it's therefore quite a useful one. And a lot of people do that, of course. They simply trade Bitcoin on momentum because sort of what else is there to it? There is, of course, the real world momentum, and that is important to understand. But, you haven't got earnings. That's what I mean about that. Robert, thoughts on the Coinbase IPO? How will that affect Riot? I think, so the Coinbase IPO happens on the 14th. Typically, these direct placements kick in at lunchtime, not actually in the morning of the day, because it isn't a true IPO. It's the old shareholders selling out. That's one thing I never like about direct placements. I mean, of course, it'd be interesting to see how they price that. Subject to a reasonable price point, starting with a 3 or a 4, I do think we are going to see a lot of volume in a rally, and overshooting. I would see it'll probably come down a little bit again. And then I do think they're going to do rather well because their Q1 numbers were absolutely mind-blowing, Robert. I did a video on that earlier, Robert. I don't know if you saw that. And I've also put on the Discord all the numbers on that. Absolutely insane. 1.1 billion EBITDA profit on 1.8 billion revenue. Now, that's what I call a margin, 70% or something like that. Is it going to be good for Riot? Yes. I think basically the whole crypto sector kind of moves together in one sort of convoy. So if it's good for, Bitcoin, and that's, of course, the one thing with Coinbase, they make all their money out of retail investors. So if this thing here goes south, and that is entirely possible. I do think we are going to hit new highs by year end, but it is also incredibly volatile. And if you go back a little bit in time, we always have massive crashes. So it is entirely possible that this comes back down to, 35 or something like that. And then we start a new rally. And at that moment, a lot of retail investors might stop trading for a period, which will be really, really painful to their earnings because that's where they make all their money from. They do have 7,000 institutions using their service. And I bought some Bitcoin on a Swiss brokerage, and I asked them, well, where do you actually store this? Where's the wallet? And they said Coinbase. So most brokerages are. JP Morgan buys their crypto through that, etc. So that's kind of the underlying thing that drives the whole crypto market, no matter who's in it and how you're investing in it, whether it's shares, equities, or various cryptos. Bitcoin is what makes the market here. It's essentially the Tesla of the EV market, if I can make that a analogy. Luke's saying painful for them, good for us to accumulate. Absolutely. What's the starting price for coin? Hjalmar there, apologies if I mispronounce your name. We don't know yet. So I put out let me find that up here. Coin. Where is it? Coinbase. I think my guess would be that it'll be in the sort of $400 mark somewhere. And this here, I've done this on revenue multipliers. And I've got two models here. This is my bearish model, which means that it means that Q2, Q3, and Q4 together will be the same as Q1. So a terrible second, third, fourth quarter. And then my bullish case is that Q2, Q3, Q4 will be as brilliant as Q1. And then you get revenue multipliers here. So say on the bullish model with a revenue multiplier of 33, you're at 581. So say we make that 20. That then is a a share price of 350. Now, Tesla trades at 20, NIO trades at 23, revenue multiplier, ChargePoint trades at 42, which is why I think it's overpriced. But this is crypto we are talking about. You are going to be in the higher end of pricing. So I think, say, a 30 times revenue multiplier is perhaps achievable. And that would give you $528 price target for the stock. Pre-IPO, rumors were that shares were sort of trading around the $300 mark. Some people are saying as high as 400 something. So I kind of think these guys are going to price it fairly aggressively. And I think we're going to be somewhere in the $400 mark. Philco says Swiss quote. Absolutely. That is the Swiss broker I was talking about. They use Coinbase too. NNDM, Afram, I'm glad you talk about that. You know, I get a lot of comments asking me to analyze NNDM. And a lot of them, I don't mean you here, Afram, but a lot of them sound like spam bots. And it has me a little concerned about the stock. Is that what their PR is resorting to? They are sort of using spam bots to comments YouTubers like myself to talk about their stock. It has me a little bit worried about NNDM. Will pre-market trading on coin inflate price to a day's high, do you think, Howard? Well, typically these direct placements list at midday. And that's basically because they have to kind of figure out the pricing in the morning. And then they put it to the market in the middle of the day. That's what the last couple of listings have done. Hans, thank you very much. The CNBC just read out a Reuters statement. Yeah, what a load of gibber, right? They're saying, oh, and by the way, it's news. It's a financial holding company. I mean, just type it into Google and see how old that story is. And financial holding company. And then look back. Okay, see 3rd of February. Ant Group regulators agree on revamp into financial holding. And that's the Standard Hong Kong. That is a free newspaper they give away in the subway. It's not the greatest newspaper in the world, probably a profitable one, but not that. So this is literally a story that is way more than 2 months old. So it is just baffling that Bloomberg, CNBC, the Wall Street Journal are rerunning 2-month-old news. I don't know why. I really don't know why. I wish somebody could explain the deterioration in the quality of journalism, if that still exists. So, lol, what's up? NNDM, please. Absolutely. You're trying to make it look like a... And they don't actually make it look that spammy. They are more saying sort of, would you please look at NNDM? I think it's such an interesting and exciting stock. And then, on the next video you have, I think NNDM is the greatest opportunity that can't be missed. Please look into it. So I sort of think, who writes that? So I kind of think that's probably some financial PRs at work there. Rolls-Royce, Flame Lane. Yeah, some of you guys keep bringing up Rolls-Royce. We will look at NNDM, don't worry. It's not a crypto, is it? Rolls-Royce Holdings. Where do you trade it? OTC? Well, let's just look at that. Is there enough volume there to look at it? Yes, absolutely. So, yes, it is. From that point of view, it looks good, right? If you think, oh, wow, this is COVID, right? So this here is COVID. No one's flying, no one's traveling. Fantastic, right? You sort of think, wow, real buying opportunity. But. I'm going to go back a little bit more in time. I'm going to make this months. And that way we can go back to, a long time. So in 2014, the stock was trading at 21. Now it's trading at 153. So to use COVID as the excuse that this stock is underperforming, I don't know. They do have great technology. I grant them that, absolutely. And they might benefit from the whole, eVTOL flying drone thing eventually. But it is a capital destroyer that, like we don't see very often since 2014. So for me, that's a word of caution. This is not a sort of, it's cheap because of COVID kind of a thing. Yes, it is cheaper, but is it cheap? I think that's really the question we need to ask ourselves. So don't look at their balance sheet, says Treve. Yeah, and that's sometimes the problem with these stocks, right? So do they pay an insane dividend or something like that? I doubt it. No dividend yield whatsoever. So yeah, I you know what? I'm very cautious with companies that actually make stuff physically. companies that build things out of steel typically lose money in the long run. I don't know why, but people who make aircraft, for example, car companies, for example, and you might think, what about NIO? What about Tesla? They're not car companies. They are kind of technology software companies that will live on subscription revenue, who have to make cars to get consumers on board it, essentially. A little bit like Apple, really. So a different story. It is huge in defense, Treeve. Absolutely, it is. Though UK and European defense spending isn't that fantastic. And given that all of those governments are basically bankrupt, given that they've bailed out everyone and their dog during COVID and have not handled it particularly well, there will be even further pressure to cut defense expenditure from already pretty appalling levels. Trump, in fairness, managed to get defense expenditure up in Europe because he basically threatened the rest of NATO. If you don't pull your weight, we're going to pull our troops out. And the troops in Europe bring a lot of cash to local communities, particularly in Germany. So that threat has also gone. So therefore, I think you're going to see a lot of that happening. Take a look at BlackBerry, 2008. Well, okay, yeah, I mean, that's a slightly different story. At least they are admitting it and they're reinventing themselves, right? So what does BlackBerry look like? I used to love my BlackBerry. Best phone I've ever had, I thought at the time. And in terms of typing comfort, it still is. I'm not sure I can actually get that chart on the screen, Philco. Oh my God, look at that. Look at that. That was, 146. But at least they've given up that business model entirely, right? They no longer are a phone manufacturer in any way, shape, or form. Robert is saying that EV raw material stocks have been trading sideways for over a month. Annoying. Meanwhile, lithium, etc. prices continue to rise. Grr. I'm with you on that one, Robert. And if you see my portfolio here on the Patreon, I'll put that up for you. I bought some 2 or 3 weeks ago, some raw material plays here because I was rather excited about them. I'm still very excited about them. And then I was thinking I would wait for a bit of a better opportunity to get in on this. So let me just hide a couple of columns here so you can see this better. And you can see they are down, mostly, with the exception of NEO, the one with an NEO, in fairness. But yes, so I think it's kind of a question of finding not quite the bottom of the market, but it will. People will eventually realize that this stuff has to go up. And if we look at lithium prices, here we have lithium prices are now at 90,000. This is the lithium carbonate, 90,000 renminbi per ton. This is in Chinese currency. So it just, it goes up and up and up. At the beginning of the year, it was here, January, 47,000. So it's almost doubled since the beginning of the year. And since December, it is, I don't know how much. It was 36. It's almost tripled. So who makes that margin? Who gets the extra margin? Well, the miners should, because they should be charging more, right? Unless they're leaving it to traders to make the margins. But I think in the long run, that isn't really gonna fly here. So it's kind of an interesting one. But yes, I think it requires a bit of patience. I think often the good stock picks do actually require patience because the market is irrational in the short term. Vale stock, Tesla contract. Where do you see Baba going this week, or will it fall back again, says LA Jolly? Well, I do think that we are going to stay at a new level. I wouldn't be surprised if that was somewhere actually around where we are right now. I'll make this a little bit bigger for you. You can see, okay, if you look at the recovery after Christmas, we rallied up and then we sort of traded sideways for a bit around that level. And I think that's kind of what we're going to see here. I don't think it's going to completely fly off. I think around that 240 mark, I think we're going to sort of tread water there for a little bit. Why? Because people will read these idiotic headlines that everyone's putting out. People will start to worry again about, and people will worry about, M&A activity being investigated, this sort of thing. And we are going to get Alibaba's earnings out. I think it's the 23rd of May. But of course, I'll put out a live call for that. So make sure you are subscribed. Otherwise, you're going to miss a treat. And that might give people a little bit of a catalyst. They might just think, hang on, they actually had a really profitable quarter. They made an extra, $9 billion or something. So Xpeng P5 is coming. What's up on Xpeng? Xpeng is doing well. They're expanding. They're building a new factory. They're putting out new models. I think they're doing a pretty good job. At the moment, though, of course, the whole sector is somewhat under the overhang here. Xpeng up 0.8% today. And the overhang that everybody knows they can't expand as fast as they would like in the next couple of months or possibly quarter or two, because no one's got any chips, basically, right? So that is going to cap the growth of these stocks somewhat. So I think moving sideways isn't actually a bad thing the next couple of months. But it's probably just going to keep bobbing up and down a couple of percent up and down each day. So Alex, there, I think I probably just answered there your NEO question, is that people are simply thinking, hang on, I'm not going to get much return and juice out of this in the next couple of months because there's a chip shortage and there's a battery shortage that's affecting the whole automobile sector. SAIC, the massive Chinese state-owned enterprise, just announced they're producing 200,000 cars less this quarter. So it is affecting the big guys much more, of course, than the little ones because they make less cars. But I don't expect much performance from any of these EV stocks in the next couple of months. So an opportunity to put money into something else for the moment, or an opportunity to buy the dip perhaps, but it isn't going to fly off the shelf within the next couple of weeks. That's the way I see that. Canaccord Genuity just raised Tesla's price target to 1,071. Thank you very much for sharing that, Philco. Would you dump that into the? Would you be so kind to dump that into our Tesla channel? I think that will be a really interesting one. I also put this out here yesterday just to give you an idea of the monthly EV deliveries in China and just what an incredible job Tesla is doing here, ramping up production there, really like absolutely nobody else. January, February, March, typically not the greatest quarters in car manufacturing here. So they really have done a tremendous job there, outselling BYD, who have been doing this for more than 10 years. So that's really, very, very impressive what Tesla is doing there. Hats off to Tesla China, really. Moataz, I do expect the Sinopec deal to be confirmed on the 15th. These state-owned enterprises very rarely go back on deals that are announced. So what they're basically going to do on the 15th is that they will open the first version 2.0 of the battery swapping station, which is the fully autonomous one, no people required, at a Sinopec station in Beijing. And I think after that, we're going to see that roll out at Sinopec. But you can also see NIO isn't relying entirely on Sinopec. They are signing deals with other major retailers, whether that's Metro or other ones that are signed one in Guangzhou as well, with a company that runs a lot of sort of stations along motorways. So they really have, I think, found the solution to the bottleneck of how to get these stations out. You just need to partner with somebody who has the real estate already. So NIO has been a punching bag for weeks. We'll pick up some more. The last week it was down a little. It wasn't terrible, but it also wasn't the greatest week. So look, this is week on week, right? So these are each bar represents a week. Let me just move that over a little bit again. So you can see we had last week, not the greatest week. And this week so far, we are also somewhat down, but we might still be able to turn that around. The week before that was actually a very, very good one. So it is very, very mixed at the moment. But I just don't see the real catalyst, to be honest with you, to really have stocks like NIO flying off the shelf. Now, what does help somewhat is the fact that Biden is giving $100 billion in, where was it here? In our EV stocks channel. He's giving $100 billion in EV rebates. Now you might say, well, that's not going to go to NIO, is it? It's true. This is not going to go to NIO. It's going to go more to Tesla and GM and Ford and all the American guys. But when the Tesla stock goes up, it pulls the whole EV sector with it. And people will simply expect, we have similar subsidies in a sense in China, slightly differently structured, but it's a similar situation here. So I do think this is actually a very, very good news story for Tesla and the whole sector. When do you think the chip shortage will be largely resolved? Well, actually, I think it'll probably take a year or two to really resolve that. But the small premium EV players that we're talking about here, NIO, XPeng, Li, they can afford to pay a premium for these little chips because they're only $1 each. And therefore, I think they'll get their hands on some. It is harder if you're Volkswagen and you have very, very thin margins and you need to buy 20 million of those chips. You don't want to spend 30 or 40 million on those chips. Whereas for NIO, if in a year they spend 100,000 on them, if they spend 500,000 on them, it doesn't really matter, right? It's a couple of bucks per car. So they can afford it. They also have better margins. So I think that'll be the fix. And the other fix I think I can see somewhat is that what NIO is putting in, these powerful kind of AI chips, I could see that replacing the small chips, but that would require some rewiring, some re-engineering, because at the moment, any car you drive has a chip for the window, go up and down. It has a chip in your seat. If it goes up and down, it has a chip for the, heating, for the display. All of that has lots of these little cheap chips that do very basic functions. You could replace them, but you'd have to do some re-engineering there of the car. So that might also be a solution, because those kind of premium $100 chips are not in as short a supply as the other ones. RH, do you see a concern that Tencent is OTC market instead of New York Stock Exchange? I don't think it's a huge concern. I mean, it's been trading there for a long time, right? And has that impacted the stock particularly? I don't think so. If you look at Tencent, not Tendent. That might be some sort of dental company here. You can, of course, trade it in Hong Kong under 0700, but here, so that's the week chart. But I mean, are you concerned? Since 2013, we've gone up only 7,000%. So no, I don't think OTC is a big issue there for them. Though it would be better for them if they were NASDAQ listed. I think they'd get a lot more volume. I don't know what the theory is there, why they are not doing that, to be honest with you. But, there we are, their decision. It is, of course, also traded as 0700 Hong Kong, which is the actual share here. So you can use that one too. In this chart, surprisingly, it looks pretty much exactly the same. Did I miss anyone? Okay, somebody was chatting at NNDM and I was talking about their spans, nano dimensions. Yeah, let's look at the actual chart. Let me zoom in a little bit. And what does that tell us? Well, the pattern is kind of this was this kind of rally we saw in February, and then the whole market sold off. So this is not really, this green bit here isn't really specific to nano dimensions. They found support here around the 750 mark or so here, and then they rallied up again, and then they've gone down. They've now retested it, and again they found that support. Now today, in fairness, we are a little bit below that. You can see we are below that blue line there, which isn't ideal. 759 was a good support line for us. We've dropped below that. I think it might well close above 759 because there is a fairly strong support there. If it doesn't, then yes, that might indicate a correction down all the way to 650 again. But if you see these tails on these charts, that means we fell that low and it was snapped up in the same day. It went back up. So therefore, people do seem to think that nano dimensions at 650 is such a steal. They're going to buy it back up to 759. So I think there's a pretty good chance we are going to end up above 759 today, or certainly in the next couple of days. That's my take on that. Alexander, why is Palantir doing so badly? I don't understand it. Okay, so there is... Actually, I put an article out on Palantir on our Discord a couple of days ago, which explained this quite nicely. It was an analyst's opinion. I might not be able to pull it up so quickly, but anyway, I can tell you what it said. Basically, an analyst saying, I like the company, I like the software, I like the margins, I think they do very well, but they're relying on a few US government contracts. They haven't acquired that many new private contracts, so I need to see for myself the growth and the acquisition of new clients. And until I see that, I put a hold on it. And I think a lot of the industry seems to look at it that way. And they just sort of say, well, yes, the government might spend more, but, we need more private clients. I don't really understand the discrimination against the government there as a customer, because the US government, A, pays, and B, is a sticky client, because once they've spent hundreds of millions setting up their systems, they're not very flexible or quick. And certainly once you are, powering, say, US military drones, are you going to change the software halfway through a mission? Very unlikely. So that's why I like the US government contracts. But I think really for analysts to really see the upside, the way I see the upside, and I do, you see my discounted cash flow model, I'm in the 80s, which I think is reasonably conservative, at least on the growth side. You might argue with me on the valuation side. Absolutely, valuations the multiples are relatively high. But the revenue, I think growth could actually be a lot better. I think they could achieve this just from the US government, what I've put in here. But really what they want to see is they want to see them sign up, 10 fairly major contracts, $10 million each, with private sector across different industries and more, or bigger contracts than $10 million rather, and for us to get a wider spread. Analysts don't like companies that are reliant on a couple of customers, because there is, of course, a risk if you lose that one customer. If Palantir lost the US government as a customer, they'd basically go home. I mean, that would be the end of it. The stock will be worthless. Not entirely worthless, but near worthless. So it's very, very unlikely scenario, but they don't like that kind of risk profile. So I think that's hanging over it. And secondly, I think it's politics. I think half of the United States does not like Palantir because of the connections with ICE and what was those sort of rather unpleasant and unhappy pictures we had from separating families and all that sort of thing. And the whole kind of the media in the US is relatively liberal. And I use that word not in the original sense of the word, in the sense that they are very, very politically biased one way or the other. Of course, the conservative media is also incredibly politically biased, but a lot of the kind of investment community, the Silicon Valley community, leans towards what Americans might call the liberal media, which is not particularly liberal, but that's a different story for another day. So it's not really about politics for me. It's not about whether it's right or wrong. I totally appreciate if people have ethical issues with investments. Like, I don't invest in most biotech companies because I don't like animal testings. I just think it's pointless for 99% of the things that people are trying to achieve there. I think, if people have a disease caused by obesity, well, stop eating cake. Don't test on monkeys. But, that's my personal view. And I totally respect if some people don't want to buy Palantir for that reason. And I think people are, and I think also certain funds are just thinking, well, if we buy that, our ethics people, our corporate social responsibility people, they won't like it. So they go and they buy a military contractor instead, and that's a little bit illogical, but that's kind of where we are at the moment. So Palantir isn't that socially acceptable, I suppose. You could perhaps draw a parallel to Alibaba. A lot of bad headlines, and a lot of people are just not going in there. Masterdoc, DraftKings, yeah, it's an interesting one, absolutely. Masterdoc, we could do a little bit of that. Maybe we should do a separate channel for that, Masterdoc, over on the Discord, and see how much interest there is in the community on some of those stocks, because they are definitely interesting plays. I agree with you on that entirely. Alexander, yeah, sorry, I didn't want to go on a complete rant there. And it's not, I buy some things. For example, I hold Philip Morris stock. I loathe smoking. I think it's terrible, but I think it's a great stock. And some people will keep smoking, or whatever it is that these devices do now that don't burn things anymore, and they are becoming more profitable, and they have the moat of all moats. Advertising cigarettes and tobacco is illegal, so you can't start a competitor. They might eventually go out of business, but until then, they are going to become more and more profitable. So I like holding it as a little bit of a defensive play. Not my entire portfolio, of course. So everybody has to make these kind of decisions. Some things upset us, some things don't. And it's totally fair enough. And I totally understand why some people don't want to buy Palantir, or they don't want to buy Philip Morris, or they don't want to buy, whatever stocks. So Alan, there, I agree with you there. I think the level 6 certification is coming. I pulled that up at the beginning of our call here. Palantir is at level 5. They're going to be up there. There already isn't anybody at level 5. And all the US government contracts they're getting, they're all basically saying, yeah, we awarded it to Palantir because there isn't anybody else. So we're not talking to anybody else. We're not interested in talking to anybody else. If we did, it would cost us more money and it would put the security of our troops at risk. So we're not going to bother. So these are the stickiest customers you could ever get, which is absolutely fantastic. MP Materials, you're saying, will have to rebound CH. Well, I certainly hope so. I do think they will. It just might take a little bit of patience. NEO at 36 now. Let's just pull that up. What's happening over here at NEO? So 36.95. That's rather important that we are. So our Fibonacci support level here is at, let me show you, 36.90. So that's the real support there. I put in 37 because I think psychologically these round numbers do always matter. But there is still a very good chance, I think, that we are going to close up, in the high 37s. If you look at the day chart for the last couple of days, let me just pull that up for you here. So today starts, let me just put a vertical line in here. This is today. And then the last trading day, we went from, let me make this a bit bigger. Apologies, it's a little bit on the small side. On the last trading day, we went down to 37.44 here. Let me get a little pen here. So that here was 37.44, around here, and not the straightest line in the world. And then right at the end of the day, we jumped all the way back up to 38.26. Why does that happen? Well, look at the amount of volume that you get at the end of the day. That's pretty much always what happens at the end of the day. You get massive amount of volume at the end of the day and at the beginning of the day. A lot of people simply don't trade during the day. They watch the pattern, they watch the chart, and then they jump in at the end if they think it's dropped below a reasonable, rational level, and they buy in again. So it is entirely possible that we can see a bit of a recovery here. Because look at, this was yesterday, this was the previous day, the 9th. We absolutely fell off a cliff here. Where's my pen? We absolutely fell off a cliff here. We bobbled along, we recovered a bit, down some more, and then boop, we jumped all the way up. Not quite all the way back up, of course, but fairly decent recovery there. So the day has not played out yet. Why is Palantir a public company, says Luke? It's a very good question. Of course, they raised some funds, which is allowing them to hire people. If you have a look at their LinkedIn and at their job adverts, I've subscribed to it. They post about 20 job ads a day or something like that. They are massively expanding. A lot of it is their sales force around the world, in London, in Europe, in Japan, everywhere. So to really scale that up, of course, it's good to have all that capital. And I think the other reason is really they want to be able to incentivize and attract the best talent. And we are seeing enormous employee compensation. I did a video on that yesterday. 1.3 billion shares or so coming in the next 8 years. So again, a big advantage of being publicly listed is that you can incentivize your staff by giving them shares or share options, and it'll encourage them to do a good job because they know, okay, I can work there. Yes, I'll get paid however many hundreds of thousands, but I can get stock. And I think I'm getting at 20. I think it's going to be at 80. And that's my real motivation for sticking around because, I have stock options are basically golden handcuffs. That's kind of the theory. Hans, you're watching a SPAC smoking play, TAAT. Okay, I don't know anything about that. That's very interesting. Do share with us more details on the Discord, please. EHang is down 11%. Law firms advising investors on a securities class actions. Or any thoughts, Abby? You know what? Every single time there is a report out, there is some sort of ambulance chaser of a lawyer who throws out a securities class action, and they try to find something that was not quite done correctly with the filing most of the time. And correct me, Robert, if you're still here, if I'm wrong. I think a lot of the time they fizzle out because they simply haven't got enough there going for them. It does seem to me that in EHang's original filing, there were some discrepancies or errors regarding the pricing for some of those contracts. That is perhaps the one thing that I still find a little bit baffling. But it is probably also being publicized by the very same people, perhaps even organized by the very same people who shorted them, and they have shorted it again, and they've timed the news release. So that's the problem. Once you're one of those stocks that gets played, you are on the radar as being the one that you can manipulate. And almost the more often you do it, the less faith investors have in it, and therefore it is easier to move it on lower volume. So. Jeff is saying TA on the S&P 500 SPX. Absolutely, we can do that. That I think is kind of interesting for everybody. Here we go. So what's going on here? It's actually not that dissimilar in many ways to the NASDAQ chart. And what I always say is, for me, there are, you can do it as a swing trade, or you can simply buy. And what I do is when we drop below our 50-day moving average line here, that's the black line there. You could do it also with a longer average if you like, but I use the 50-day. So the black line here is the 50-day moving average line. When we fall below it, like here and there and here and here, and on the 25th of March. To me, those are days where it's really good to load up. I actually don't buy S&P 500 ETFs. I buy a value fund instead, but it sort of represents the kind of pattern there. So for me, that's always one thing to look at. And you could then, of course, find an indicator that would, again, give you the sort of top of it. If you wanted to be really lazy, you could almost just draw a line like that and just sort of say, well, when we hit the top of that, we typically come down. And I think that is really why today the market is trading a little bit down and a little bit sideways, because we have hit one of those tops of that band here. And you can see that here at the top, we are selling off a little bit. So I kind of think the S&P 500 this week might not be the most glorious in investment. So I think that's kind of the broad momentum there. We can, of course, pull up a couple of indicators here. Let's pull up RSI and MACD. Okay, we do one at a time. So RSI, if you put a line at the 50-point line here, so here 50 points or thereabouts, always put a horizontal line in, and when we cross it, to me, that's a buy signal. So this here was a buy signal on the 9th of March. And I can't place it exactly, but you see that purple line here. Hang on, I made my line purple too. That is confusing. I'll make that a red line. So you can see where we get that purple line crossing the green one. That is the buy signal. And you go up here, yeah, not bad. But it does miss the dip. I'd rather simply buy below the 50-day moving average line for me personally. But still, it's a good buy signal. And then we've sort of zigzagged a little bit here. We've got a bit of a false sell signal here and then a buy straight in again. So we are still on a positive momentum. And then we've hit up here. This area up here above that dotted line is the overbought area. So that whole area up here is basically overbought. Anything above that dotted line is overbought. Now you can be in the overbought area for some time, but it can also indicate to you that it is perhaps going to reverse again. And for example, you can see that here where we touched that green line up here. We just touched the overbought area. So this was a stronger rally. Typically chart analysis would tell you to wait until we cross again through the 50-point line. But I've sort of back-tested that and modeled that. And then I find you are simply buying and selling in the middle of the channel and you're never making very much money. So I sort of don't like to do that. But yeah, thanks for throwing that out there. I think that's an interesting one. So yeah, just saying I love the Patreon ticker at the bottom. Yes, I thought I'd throw that out there because I think it is a fantastic community and I think people enjoy it. It is 50 cents a day, guys, to join it, and you get for that the same benefits as the $23.95 tier. You get, of course, access to our fantastic research-based Discord, and you get all of my research, my discounted cash flow models, what I'm trading, what I'm buying, and lots of information that I put out there that simply cannot make it into videos because, for once, one thing is YouTube doesn't like a lot of content, and also, I haven't got 100 hours in the day. Alibaba here doing fantastically, and Tesla really the only ones on my list here that are doing really well. So that's kind of interesting to see. Do you think you need to have high intelligence to understand charts at a productive level? I'm relatively new to trading or investing and struggle with understanding all of the indicators, Luke. No, you know what? I don't think it's rocket science. I think financial people like to make out that it's rocket science to keep themselves in business, but it really isn't. I think there are some really simple things, and I'm actually working on a course at the moment. Tomorrow is course day. You won't see me tomorrow. You will see me again on the Palantir demo day live call, because tomorrow I'm recording course materials. And there's one actually I put out on our Patreon again as a teaser, and that was precisely that, a TA, technical analysis introduction, just some basics. It isn't really rocket science at all. It's just, I think it takes, the idea with it is that it takes emotion out of trading. It gives you some rational indicators to look at. It kind of models emotion, funnily enough, in human psychology. And I think it's very effective. I don't trade entirely on it. I like to trade on fundamentals, but certainly for entry-exit points, it can be very useful. Or if there's something, it's like I like to buy stocks every week, and I like to time them somewhat on what I'm buying. So for those kind of decisions, I think it can be very, very useful. So yeah, I think it's an interesting thing to look into. And it just helps you understand a little bit more the psychology of the market. And so, for example, Bitcoin we're talking about earlier. I think buying Bitcoin without a basic understanding of technical analysis, you are typically buying it at the top and you're selling it at the bottom. Now, if you're just buying it and you're going to hold it forever, perhaps it doesn't really matter. But I think I'd rather buy it a couple of $1,000s cheaper than required. Chris Jones, do you think Biden's infrastructure plan will only affect US EV companies, Tesla? Chris, I think it'll be predominantly of benefit to Tesla. It will also benefit somewhat GM and Ford and everybody else in that space, because they're going to directly receive these sort of subsidies we're talking about. However, Tesla makes the EV market. So as Tesla stock flies, it does pull NIO along with it. The correlation is pretty close to 1. Gary, a big welcome to the chat, one of our first members, and also great to have you over on the Patreon, Gary. Thank you very much for your support. Hans, I agree with you. You don't need to look at that many technical indicators. I mean, if you watch some of my technical analysis, what I look at, I mean, just look at, these are the ones I've got saved, my favorites. I very rarely look beyond these. And one of them is volume and zigzag, which aren't really indicators at all. So maybe if you want to start with moving average lines. That's kind of an interesting and simple one. I also like RSI together with MACD. That's a very nice pair. But it doesn't work very well for growth stocks because this kind of volatility they're not very good at. So for very fast moving stocks, I like to look at Williams R. It's kind of a cousin of the RSI, but it's the faster cousin. It's basically the sprinter of the kind of momentum world there. So just look at a couple of those, or you could simply look at Bollinger Bands. I also find Fibonacci retracement lines incredibly insightful because they kind of tell us where stocks are going to go to or where they're going to stop as they fall. So how often do you buy stocks on average, Bob? Once a week. Typically every Friday. Sometimes it's Mondays, sometimes it's Fridays for no particular reason, but I really like buying averages. So I like buying every week. I think it, again, it takes emotion out of it because you have to buy. And, you could do it monthly, you could do it quarterly, but I find I used to do it quarterly and I'd forget. Or then I do it a bit later and a bit earlier, and then you sort of emotion comes into it again. Whereas if you kind of set this thing, well, I have to invest it every week, and that could literally be, $100 or something. It doesn't have to be a huge amount. Then just make sure you're buying something with low trading fees, of course. But I think it encourages us as a sort of discipline, and yeah, I really like it. And also, if you are into compounding, which I am in, then, okay, for example, I'll give you an example. I managed to save on a business expense $700 US dollars a month. Complete waste of money. I was spending it on something. So I cut that. If I invest that $700 every single month, which I will do, into just my value portfolio, which gets me 11% plus on average every year, and I think I'm very confident it's going to continue giving me that. In 10 years' time, do you know how much money that will be? $150,000. So me saving $700 and reinvesting it every single month for 10 years, and I will do that. I'm disciplined like that. I'm going to have $150,000 I didn't have in 10 years' time for no extra work. I've done nothing different. I just got a saving. I cut something. Now, you might think $700 is a lot of money or a little bit of money, but the principle works the same. And I don't take the whole compounding to the sense that I'm a hermit. I no longer spend money on anything because I think we should enjoy our life. But if there are things that are wasteful that we are not using, that could be subscriptions, that could be stuff we buy and we never use or wear or whatever. If you can cut those off, you can save $10, $50, $100. You put it into something that'll solidly compound. Crikey, it's absolutely incredible. And, I'm planning on being around for a lot longer than 10 years. So if I take it further, it's going to make me a hell of a lot of money. Jeff, thank you very much for the likes, guys. For every one of your likes, guys, I donate to the Farm Sanctuary here. 1 cent. I've donated $690 to them so far in the last 2 months. So let's make that a bigger number for this month. You guys can also vote for the next charity at the end of each month that you want me to donate to. So that's a nice little thing we do. Why is the market down? Well, really, somebody very kindly, and apologies, I don't recall your name, suggested that we look at the S&P 500 and really actually make that a little bit of a nicer line here. So we're going to make this a band. So let's just start. We don't have to start forever back, but if we do this and, well, I suppose something like that. Say something like that. This is our S&P 500 channel, and you can also see our black 50-day moving average line down here. So when we hit the top of that channel, we have a little correction and we move sideways or we sell off a bit. We find our way back perhaps to the middle of the channel, perhaps a little bit lower. If we hit the 50-day moving average line, for me, it's shopping season. And then we go up again, and we go down again, and we go up again. And now we've hit it. And therefore we are selling off a bit. So I think this week might be a little bit of a sort of sideways week. Jordy, yes, there is this story out that NIO has 3,000 patents. That story was also out around early January. I actually did a video on that, and I did a lot of digging into the patents there. Now, the first thing, of course, is it's great NIO has a lot of patents. The second thing is that the number of patents don't necessarily tell you what the value is of patents. Patents get revealed 18 months after filing, typically. So they will have a lot more that they have filed. And it's good they're doing that. They're doing a lot of R&D. They're going to spend $1 billion on R&D this year. The year after, it'll be 2 or 3 billion. They're really ramping that up. So it's a good sign. It's a good indicator, but it's kind of no more than an indicator. So I think it is positive. I'm glad they are researching and they are sort of protecting that research. But it could be something very small or something very big. You don't really know unless you've gone through all of the patents. So I think it's a positive story, but it is also not one that is necessarily going to change the world. Bob, okay, you buy once a month. Look, I think if you're disciplined enough to do it once a month, for me, what I found, as I said, I buy every first of the month. And then by the time I did it, it was the 19th of the month. And if you look into compounding, sitting on that cash for 19 days unnecessarily loses you a lot of money. So I prefer to do it once a week. Does compounding work for index ETFs only, Lily? No, it works for anything, really. Now, it works better with stocks that have good margins and good free cash flow because they'll make money, they're profitable, and they'll reinvest that, and they have to have a good mode. So something like a Microsoft or a Facebook or those kind of stocks that are highly profitable, very good margins, long-term business, lots of subscription customers, we can't really live without them. So those kind of businesses will do very well. I mean, you can, of course, also simply buy growth stocks every week. I also buy growth stocks, of course, but a little bit more difficult to calculate because you're not making money off their, They say they grow 20% every year and their margin is 20%. Well, the stock price is it should go up in a rational world, say 20% a year, right? Or thereabouts. Maybe it's 10 or 12% or 15% if you sort of discount it back a little bit. Whereas if you're buying a high growth stock without profitability, it could go from 1 to 100, or it could go out of business. So therefore, for compounding calculations, it's a little bit harder to do. Gary, Pltr is annoying you today. It's been annoying me for quite some time. Gary, I'm with you on that. I last bought at $28, so I'm not particularly happy about it. But I'm going to put a video out, Gary, on just after this call on all of this here, all the defense spending and the US government spending, and have a watch of that, because I did put one out a day or two ago about all the insider selling, and that was perhaps not the most positive of videos, but there is a different side to it as well. So do have a look at that. Robert, does compounding work for non-dividend growth stocks? It works for non-dividend stocks, Robert. The growth stock. Okay, so let me pull up something here. So let's say we look at Baba. I'm not going to look at Baba, but I'm going to look at this here. So these are some of the absolute blue chip stocks out there, right? So say we take a Microsoft, right? So Microsoft has a 68% gross profit margin. It has a 42% return on common equity, and 23 billion, is that right? 23 billion? No, actually it's more. It's 50 billion free cash flow a year. And what are they doing with that? Good question. They're reinvesting it. And if you look at their growth, Microsoft is growing at revenue at 14% a year, EBIT at 24% a year, because the whole business, well, it's cloud and subscription, right? So it's hugely profitable. So their EBIT margin forecast is 40%. So that's their margin, and their growth on that is 24% a year. So hard to see how the Microsoft stock is not going to go up at least 10, 15% a year, right? In a rational world. Now, there could be times when it doesn't, but in the long run, as long as they keep doing this, this is compounding, right? They are highly profitable, high margins, and lots of growth also. So in that kind of growth stock, yes. If you take a growth stocks with negative profit, you're not really compounding anything, right? It's a different investment philosophy that also makes sense. We are betting on capital gain rather than on just sort of income piling up here. Thanks for that question, Robert. So Bob, no, you don't need a dividend, Bob. I really don't think you need a dividend to compound, because actually, if they make a lot of money and they reinvest the money to make more money, they actually compound faster. So there's two different ways of looking at it. You could take your dividends and you can buy shares again. But if you have a really good company and they simply take the money and they reinvest it and they make, again, 40% margin on that reinvestment, well, I'd rather they reinvest it than pay us dividends. I'm not actually, from that point of view, a huge fan of buybacks or dividends, because it sort of means they've run out of things to invest in. What do you think about government-issued inflation percentage data? Do you believe it's an accurate indicator of true inflation? So I think we're going to get that tomorrow. I think the 13th, tomorrow, 8:30 a.m., you're going to get some more inflation data. Right. So inflation baskets measure household consumer spending. So it's kind of your groceries, your electricity bills, your petrol, that sort of stuff. And for that, it's fairly accurate. It is, of course, a massaged basket. And in times when we had very high inflation, say in the 70s, 80s, the governments all repackaged that to make the headline number lower and lower. Why? Because trade unions were demanding inflation plus 5%, which was in itself causing more inflation. So they have all kind of tinkered with those baskets, absolutely. Now, the problem with it is that it doesn't measure assets. So property, stocks, bonds, crypto isn't in that at all. And therefore, we have massive inflation. I mean, look at the S&P 500, right? I mean, you don't call that inflation. To me, that's inflation. That's asset inflation. And the problem is that during this entire period, salaries haven't really gone up because there's no inflation from a government measurement point of view. So what happens? It causes wealth disparity massively, and that's the same with all the money printing and the stimulus. Largely, it basically goes into stocks for the people who have money, and they make a lot more money with it. They're compounded, whereas the people who haven't got sufficient salary don't. So it causes actually a big social problem. So yes, I think we have massive inflation in terms of capital. But we have no inflation on a day-to-day basis. A lot of that's also got to do with manufacturing advances, importing cheap goods from China, Mexico, wherever. Clothes and household items, food items have gotten cheaper. The sort of hideous side of mechanized agriculture has made things cheaper. So I hope that answers your question. Do you see a market crash coming in 2021, 2022? Not really, Chris. And the answer there is governments. We are due a crash, but we are not getting one because the government is, they are rather soft. They don't think we can handle it. So they want to protect us from it, and they're doing that by printing money and piling up debt, which in the long run doesn't really fix anything. But look at Japan. They've been doing that for 20, 25, 30 years maybe, and they're still doing it. So you can't do it for a very, very long time, and it just sort of turns economic models upside down. But yeah, so I know I don't really see that. Robert, thank you very much for sharing that interesting information there on patents. In the end, everybody cross licenses. And Robert, we have looked at, for example, battery swapping stations, right? Both NIO and Tesla seem to have almost identical patents on that in the US and in Europe. So eventually, perhaps everybody just sits down and says, well, you use mine, I use yours, everyone's happy. Games Workshop, stocks, financials. I haven't looked at that, Treve. Apologies. I am not an expert on GAW in any way, shape, or form. And guys, on that note, I'm going to have to wrap it up here. I encourage you to come over to our Discord and Patreon community. It's a fun-loving community. It's 50 cents a day, and you get loads and loads of stuff. Just check it out. The link is obviously below, as you can see. It's sort of bobbing about. Read some of the testimonials. See whether you are so minded. In fact, I might even have here some testimonials. You see how organized I am? This is what some of our guys are saying. I didn't make them do it. I didn't pay them for it. It's just what they said, and I saw it on the Discord, and I thought I'd share it with you guys. So come and check it out, and I look forward to your questions over there. And otherwise, see you on the Palantir demo day. That is in 48 hours' time. Until then, I'm going into hiding to record course material. So thanks very much, guys. Thank you for all your questions. Thank you for tuning in, and thank you for subscribing and liking as always.